Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday night video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Now, keep in mind, guys, all of these options plays are going to be for selling options, more specifically selling put options as part of the larger wheel strategy that we run on the channel. Selling puts is a very easy strategy, whether you're a beginner, intermediate, or even advanced investor, and provides a great source of extra income that we can use for our trades, and usually it has a very high win rate percentage. Now, all the trades usually are in above 90 to 95% win ratios, so just a question of timing them right and getting some good strike prices. Now, keep in mind, guys, in terms of selling puts is basically as follows. It is a buy limit order that pays you. So let's say we wanted to put a buy limit order down here on Microsoft stock at a good level of support, such as down here. Well, we can simply put a buy limit order here for 100 shares. And if it gets filled, perfect, we end up with the shares. But if it doesn't, well, then nothing usually happens. A short put order or selling puts is a compromise between those two things. It is a buy limit order that you can set down here by selling a put at that strike price. And if in the event it does not get hit, well, you collect all of the premium. So let's have a look in terms of Microsoft. If we were to pursue this example a little bit further, let's say I wanted to write a put on Microsoft down here at about $395, right under the expected move for the week, which is $396.20. Well, I could just set a buy limit order there for 100 shares. But as I said, if it doesn't get hit, guys, you don't really get anything for it. However, that's where short puts come in. We can write a short put at $395 right here and generate $200 in income. That way, if Microsoft remains above that $395 by the end of the week, we just get to collect $200 in premium. If ever it ends below that strike price, well, we have to buy the shares as we were planning to do anyways, but we also get to keep that $200, and that reduces our cost basis by about $2 per share. So very, very easy strategy to run here, guys. So in today's video, what we're going to do is go over a few of these strategy rules. Number one, very quickly. And then number two, go over the top 5 options plays for the week. And I have, traditionally as fashion, guys, I have a bunch of bonus plays for you. The bonus plays, they're bonus plays not because they're not as good as the top 5, but because they're just not ready yet. So we keep them on the back burner on a watch list somewhere, and we keep an eye on them this week in the event that they do end up freeing up. The top 5 options plays, those are already at our targets and ready to strike. So moving on in, guys, before we get to the rules, let's go over a few of the things that we're looking out for over the course of this week, right? So we obviously know that last week was a very destructive week from the markets early on in the week, and then we had a very nice recovery on the S&P and even the QQQs for the remainder of the week. However, quick reminder, guys, what are we expecting, right? We are in the context of a big daily downtrend right now. So what we're expecting is not a V-shaped recovery right now. With such a magnitude of move down, usually we're expecting a lower high and then potentially a higher low setup for the bulls to make a second attempt at this location, right? Big resistance overhead us on the SPY right now and big resistance above us on the QQQs as well. So these two patterns are going to be the ones I'm looking out for on the SPY and the QQQ. What we want to do, guys, is in the event we run up into this location on the Monday or Tuesday session and get rejected, we are looking for that pullback, right? This pullback is going to provide more than a few opportunities in the market, and that's what we're going to be looking for, guys. We don't really want to chase these markets as they move higher. We're wanting to wait for that inevitable pullback, whether it happens right away on the Monday morning session or we move up into the Monday session into this resistance, and then maybe Tuesday and Wednesday show a little bit of declines. So those are the setups that we're looking for on the indexes, just looking for those potential daily higher low setups to maybe move back into a daily uptrend, as I do think the bulls probably at this point in time might be getting a little bit tired heading up into this resistance zone. Keep in mind as well, guys, a very charged week in terms of macro news events. So in terms of on the Tuesday session, we get producer price index, another gauge for inflation. Then we get a few Fed members speaking as well, with Fed member Bostic speaking at the end of the session on Tuesday. On Wednesday, another very big day, guys, we get CPI for the month of July. Should be a very, very interesting day. Now, we don't really have that many more concerns about inflation. For the large part, it is trending in the right direction, but any bad surprises to the upside here, guys, could be met with a little bit of market uncertainty. Then on Thursday, we have more reports. Once again, initial jobless claims is going to be a big one to look at. Retail sales as well, because we know the consumer is slowing down right now. We just want to know how much. and is it still healthy or is it maybe a little bit recessionary? So big day on Thursday as well as Fed Harker's speech. And then on Friday, we wrap it up here with consumer sentiment, once again tying into whether or not the consumer is healthy or not. So very charged week in terms of the macro, that's for sure. In terms of earnings, guys, well, most of your large corporation earnings are behind us, but we do still have a few notable ones here coming out on the Monday session. We have Monday.com, very, very fitting that they're reporting earnings on a Monday right there. And for the most part, for the rest of the week, we do have several other big companies, but nothing the likes of big tech, right? So Tuesday, we do have Home Depot. On Thursday, we do have John Deere. Walmart, especially, is going to be a very big one. Alibaba is another one that I'm going to be looking at too. So all in all, earnings season is kind of winding down, but should provide some very interesting data points into the consumer's health over the course of the week. That is for sure. So with all that out of the way, guys, let's jump in right into our strategy rules. And we're going to run through these quickly, guys, just because if you haven't seen, I have a 30-minute detailed video where I go through all of these strategy rules, really point by point in depth, right? And show you guys how I pick my stocks, how I pick my strikes, and go over the rules in more of a detailed fashion. So let's get into the rules right now. We're going to fly through these. So if you haven't seen that 30-minute video, guys, I'll leave it top right corner in the video right now, and also down in the video description if you want to catch up. So put wheel rules. Number one, solid company, guys. It's rule number one for a reason. Please never, ever, ever write any puts on a company you do not want to own at a strike price you do not want to own. The crux of this strategy relies on picking high quality companies that if ever you get assigned, you do not mind being assigned because you are confident in that company's ability to quickly recover, right? So please, rule number one, always choose to write puts on a very solid company. Number two, we want to be targeting stocks that are in a monthly uptrend or a long-term range. This just gives us a better probability of having a bounce when we come down into a level of support. If we're in an overall long-term uptrend, usually the bulls will support us and get us out of that zone of support. Number three, very important, guys, do not write any puts on companies that have earnings this week. You guys have seen how volatile this earnings season has been, right? Companies dropping 10, 15, 20, 25% everywhere, left, right, and center. This season has been especially brutal for that. So if you want to keep volatility to a minimum and keep your chances of success at a high, never write any puts on a company that has earnings this week. Not just for this earnings season, but just in general, guys. I can tell you guys from myself, I show it to you all on the channel. My only big losses this entire year so far have been a result of me wanting to play earnings. Even though I play them in a lot more conservative fashion than other people, you can still end up getting trapped. So if you want to be safe, just don't do it. Number four, we're going to be looking at stocks in a big support area or an area of breakout retest. A breakout retest is essentially something like this on the SPY. You can see, right, breakout right here. And then this little candle right here, we are back testing the prior all-time highs as support and then run. This retest area is known to be a very high probability trade. So we're going to be targeting one of the two, either in a support area or an area of breakout retest. Now, these next 2 points really go hand in hand. We want to be writing stocks, puts on stocks that are at or lower than the expected move. If you don't know what the expected move of a stock is in a given week, guys, you can go to this website right here, optionsai.com. They have a free expected move tool, and you can see I have Microsoft pulled up on the screen. The expected move to the downside is about 396.22. So we always want to be writing below that expected move, guys. This is Wall Street's probabilities of where a stock can end up by the Friday session. So if we're always trying to write below this, that would be known to be below the expected move, outside of your normal standard deviation. And usually when stocks pull below their expected moves, at a certain point in the week, they do have a little bit of mean reversion and come back up. So if we're always writing below the expected move, guys, it just adds to our probabilities of not being assigned. The next one, writing on a red or flat day. So you'll never see me write puts on a green day as a whole. We never want to be chasing the market. We always want to get the best deals to the downside. So if we can be writing on a red or flat day, preferably a red day, especially when the stock is moving hard into the expected move. Like if Microsoft on the Monday session drops from 406, which was the Friday close, all the way down to about maybe 400, 399, right? Well, we're going to be pretty close to the expected move, and then we can write even further below it, maybe the 392s, 390s. It increases our odds of not being assigned, so we use these two together. Now, before last, guys, we want to be writing between 0.5% and 0.75% in weekly premium. This is your ROI. The reason I choose 0.5 to 0.75%, guys, is because it represents the best trade-off between risk of assignment and the reward, the money that you put in your pocket, right? If for some reason, let's say on Microsoft, right? If we go too close to the stock's current price for the Friday session, let's say we wanted to write the 405s, they provide $500 in credit, guys. This is well over 1%. If you don't know what I mean when I'm talking percentages, just take the credit that's provided on the strike you're looking at, 495 in this case, divide it by 405, which is your strike, and you'll see this is about 1.2%. A little bit too high. We want to be going for roughly half of that. The reason that I don't like this, guys, is it's too close. Your risk of assignment is just too large. So the premium is attractive, but the risk of assignment is also quite large. The reason we choose 0.5% is because it's really the best trade-off between risk of assignment and profit. So taking a look here, 395 is where we want to be situated. And if you want a quick rule of thumb, some quick mental math, so you can go through these options chains very quickly to find the 0.5% rule, look for half of the strike price in cent or dollar increments. So this one right here, 395 is roughly 400. We want to be looking for at least half of that, aka $2 on the bid. And you can see it is available right there. If you want to do the calculation just to see that it works out, $2 divided by 395, that is roughly 0.5%. So those are the ones we want to be looking at. Now, we want to also set a take profit order at 90% of the contract value because this strategy is so easy and so hands-off, guys. Once we get into the trade, we just let the time decay do the rest. There's really very little management once the trade is open that is required by us as traders. So the best we can do is set a take profit order at 90% of the contract value. That way, in the event we get into a position on Monday morning and maybe Tuesday afternoon or Wednesday afternoon, it's already worthless. We don't have to wait until Friday to close. We can set a take profit order at 90% of the contract value, which ensures us to have a win when that does happen, right? Now, in the event we're ever assigned a position, so if the stock price closes below our desired strike price, let's say Microsoft closes below 395, what we want to do the very following week, guys, is be writing covered calls. So we write puts to get into a stock potentially, and then to get out of the position, we're going to be writing covered calls. So we want to be writing covered calls between 0.5% and 1% in weekly premium, almost the same rule as above to get into the puts. And we want to be writing covered calls at the assigned strike price. So if ever I get assigned Microsoft at 395, the following week, I want to be writing covered calls at 395. The only time I will choose to write one strike higher than where I was assigned is in the event, let's say Microsoft on the Friday session closes at 394, slightly below our strike, and we have to end up buying the shares. Then, let's say on the Monday morning session, they get a very nice morning. Let's say we have a gap up open and brings us all the way to 400. Well, that will be 2 strikes above our assignment price, and that is the only time, guys, where we gap up on the Monday higher than where we got assigned, where I might choose to write the 397.50s, right? So we can pocket a little bit of strike difference here, $2.50, plus all of the covered call premium that we'd get from the covered call portion. So usually that is a very decent thing to do. Also keep in mind, guys, if ever you get assigned and the next week we gap up higher, by all means, if you just want to sell the shares and not even bother with covered calls, you can do that too. Just sell the exact shares higher than you bought them, and that's perfectly fine as well here, guys, right? So moving on down, now we're going to get into the juicy stuff. So let's look into the top 5 options plays of the week, shall we? So moving on in, guys, stock number 1 is going to be a couple semiconductor plays that I have prepared for you guys. So number 1 is going to be AMD. So AMD obviously has been getting absolutely crushed in the past 4 weeks of trading, despite having very, very good earnings. Now, we're coming up onto a very, very big area of support down here. 121 all the way down to roughly 110. This green box that I've labeled on the chart. So taking a look at AMD, we do appear that we're trying to bottom out here, right? So the expected move right now is about 127.62. So we want to be finding premium below 127.62, preferably as close as possible to last Monday's lows, maybe 122, 123, because if we can get really low in the 120s, guys, well, there's a massive area of support below us, so the drawdown shouldn't be too brutal. Now, moving on into the options chain, let's find if we can see any premium on AMD in that lower area, below the expected move of 127.62, but closer to maybe 122, 123. We really want to go as low as possible, right? Because AMD is such in a big sell-off right now in possibly daily oversold conditions, and also coming into some good weekly drawdown levels as well on the RSI, right? Nowhere near weekly oversold, but still under half. So moving on in, Let's take a look right here. And as you can see, we're looking for 0.5%. 0.5% of the 120 range, guys, is roughly 60 cents, right? Half of 12 is about 6. So that's how we derive that quick mental math rule. So you can see there is enough premium available at the $123 strike. You can see it's about 60 cents, the midpoint maybe 61, 62. So these would definitely qualify for our strategy. So in the event we open either flat or a bit red on the Monday session, guys, well, the 123s are maybe going to be available, are definitely going to be available rather, but maybe even lower. The trick of this strategy, especially in times of uncertainty, guys, is getting as low as possible while still getting our 0.5%. So in the event AMD opens up red, let's say minus 1, 2, 3%, and comes down into the 133, 32, 131, even 130 range down here, we're going to be close to the expected move. That will probably free up strikes even lower, guys. Think maybe the 121s or the 120s. So I really want to be going as low as possible and closest possible to 120. So the strikes that I would like this week is 123 all the way down to about $120. If we can get even lower than that, perfect. But at a first glance, these are some of the ones that I would like on AMD. Now, the second semiconductor stock that we're going to be looking at, guys, is NVIDIA, just because they are such a strong name and arguably the leader in the industry for momentum right now. So we can see AMD bottomed after the Monday session at about 94. 94 is a perfect area, guys. It's really starting to be the base of the prior resistance level, prior all-time highs right here, which should be acting as support currently, as it did last week in the market. So we really want to be getting as close as possible to this big area of congestion, guys, which is pretty much your let's just call it 95 down to about $88 range, right? That $7 range, this is where we want to be taking our trades. The expected move for NVIDIA for the week is 98.41, but that's a little bit too high. We want to be going 94 down to about 87. So let's check if there's any premium on NVIDIA down in that location right there, right? So let's just pull up NVIDIA right now and let's have a look, seeing if we can find some of that juicy premium. Give me a quick second. And let's move into it. So NVIDIA here, 94. Let's just expand the chain right here. Give me a quick second. All right. So looking for, once again, guys, 94 to about $87. I guess NASDAQ.com froze up on me. My bad for that one. Not too sure what's going on. Oh, it's loading me up all the strikes. All right, we can do that. So let's get towards the 87 to about $90 range. Sorry, guys, maybe lack of professionalism for not being prepared for this one. Didn't think the options chain would take this long to load. But just a quick reminder, once again, guys, we're targeting this location right here as low as we can possibly get on NVIDIA, right? Whoa, one more page. I guess we're almost there. I didn't know there were that many strikes on NVIDIA. Maybe this should take some out, right? The next ones are also going to be fairly juicy here, guys, as well, right? I'm not going to try to edit this video. You guys know me. Really want to do this one straight shot through it. So let's just bear with it for a quick second here, guys. You can get to hear my beautiful voice talking for the nothingness, just trying to fill the gap in space, right? So finally, we have our options chain. Now let's move into the $94 range. $94, half of 94 is 47. So we need to see at least 47 cents. Do we have it? Yes, 59. We can even go lower here, guys. That starts at about $93, right? And you can see there's some fairly decent premium down here, 93 all the way down to about $90. $90 is a little bit cheap, right? We need to see about 45 cents. So far, that's only available at the 92.50s. So moral of the story, we might need a little bit of a dip on NVIDIA right here. If we get a dip on the Monday or Tuesday session down into maybe the $102, $100 range, that will probably free up, guys, lower than 94, right? 94 at a first glance is not that bad, but I want to be playing this one a little bit safe, because we know how volatile semiconductors have been, right? So in the event we get a little bit of a drop down here, 100, 99 on the Monday or Tuesday session, well, that is where I'm going to be looking, guys, for the maybe 90s all the way down to $87 strike. So these are really my preferred strikes for this week. As of now, the only one that's available that makes sense is roughly the 92.50. That's as low as I would go right now. But if we can get the 90s all the way down to 87s, those would be a little bit more safe in my humble opinion. But still, some very decent premium on NVIDIA this week. 92 down to about 87. That is my desired strike location for this stock. Decent little sell down area, guys. And that would be a great discount on NVIDIA. We'd be pretty much getting the stock anywhere between 35 all the way down to about 37% off the all-time highs. Very decent trade in my opinion. Now, moving on third, So second trade, because that was one trade, just two semiconductor names, depending which one you prefer. The third trade is going to, second trade is going to be an Airbnb. So Airbnb had earnings obviously last week and had a little bit of a tumble despite having very, very decent earnings, which we covered all on the channel. Valuation down here is relatively good as well, which is why I do like this one. And we're coming up into a very, very large area of previous support, guys. 110 down to 100 is such an extremely solid area for this stock and should provide to be at least some very good support for a first touch into this location, after which we may find a little bit of a bounce. Weekly oversold conditions and daily also remains oversold conditions. That is why I like this one, guys. Everything is leading up to a bounce. Big support area, weekly oversold, and the daily oversold as well. So the expected move on Airbnb is about 111.26, this yellow line right down there. So let us see if we can find any premium on Airbnb in that lower location below that 111 mark. So happy to see this one loaded up a bit faster. And as we can see here, guys, there is some decent premium at the 111, which is under the expected move of about 76 cents, right? That is about 0.7%. We want to be going a little bit lower, being a little bit safer, right? So the 110s right now are providing anywhere between, well, the midpoint arguably is about 54, 55 cents. It says 52 here. That's exactly what we're looking for. The midpoint of 110 divided by 2 is about 55. So that's exactly how much we're looking for. So the 110 would indeed respect our trade criteria. Now, in the event Airbnb on the Monday or Tuesday session has a little bit of a dip, that's going to give us even better pricing and even better strikes. So in the event we fall from 115, let's say we go 113, 112 on the Monday or Tuesday session, guys, that will most likely open up even lower strikes, maybe the 109s, 108s, or possibly even the 107s. We want to be going as low as possible under this expected move and into our big area of support to guarantee the further we come down into here with weekly oversold, daily oversold as well, the more likely we are to get a little bit of a bounce. That's why I want to go as deep as possible here and not just settle for those 111s. So in the event we get that dip Monday or Tuesday, you guys know I will be looking probably for anywhere of these four strikes. 110 down to about 107, as low as we can possibly go. And obviously, guys, if Monday is an extremely brutal day, right? These strikes are not set in stone. Same thing for AMD, same thing for Nvidia. If in the event Monday is a disaster of a day like last Monday and we gap down like 4, 5, 6%, guys, well, then obviously we have to be going a lot lower than that. Think maybe 104, 103, 102. So the art of this strategy is being able to readjust depending on what happens on that Monday or Tuesday session, right? That is the true art of the strategy. These strikes are not set in stone, provided they're within our big areas of support. We want to be going as low as possible to really get the best bang for your buck for putting that trade on. Now, trade number 4 or 3 rather is going to be OXY, Oxy Petroleum, right? Occidental Petroleum. This is Warren Buffett's pretty much favorite energy play in the game right now. And as you can see, we've slowly been coming down into my desired area right now. This level right here, 56 down to about 54, is at this point in time 2.5 years worth of support. So a very, very good level to be basing ourselves off of. It is also the 200 weekly moving average, this line in green, which just came and caught up with the price right now. So you can see we're not too far above that right now, which could present us a great opportunity for maybe a little bit of a retest before the market resumes its little bounce right here. So that being said, OXY, the expected move on the week is 57.5. Let us see if we can find any premium below that, preferably in the start of the $56 to $55 range. Now let's pull up OXY so you guys can check it out. So moving on in, can we find any premium right here below 57.50? So think 57, 56 as low as possible. And as you can see right here, guys, we do have the available premium on the $57 strike. Almost, right? Half of 57, you could say it's about 28.5, right? So getting about 26, 27 cents there. It is slightly short of our minimums, but I would still take this trade. We may want to wait for the 56s if in the event we get a major dip on the Monday session. Let's say on the Monday session, we dip down into the 57s or maybe even high 57s or low 57s, right? That will probably free up the $56 strike. So I want one of these two strikes this week, guys. I want either the 57 or the $56 strike, both of which are relatively close to our big area of support, right? Our 2 years worth of support zone. If we can get as close as possible into there, I really do believe it's a gorgeous trade for OXY Petroleum, guys. Nothing wrong with the company. Fundamentals are very, very, very decent. And I do think in terms of the technicals as well, a very, very solid trade. So the 57, 56 trade is going to be the ones that I'm looking out for on OXY. Now, the next trade on our list for this week is going to be another very, very solid company, guys. And this one is coming back. You may remember that we traded it a lot in the past 4 or 5 weeks. And now it is finally coming back into our desired area that we want to trade it some more, which is the mid $250 range, right? The stock is on a very, very juicy dip buying opportunity. Gorgeous monthly uptrend right here. 4 or 5 months of consolidation at this point, bringing us back into our prior all-time highs, prior breakout range as well, the all-time highs, coming back for a glorious retest before a potential run. I love this company, extremely solid. The fundamentals are obviously amazing. One of the best companies in the entire market right now, so we have to be making the most of these dips when they do occur. That being said, the expected move on Visa for the week is about $254.65. So can we find any premium on Visa below that expected move of roughly $255? Well, let's have a quick look on the Visa options chain and we will see what can we get. So the one thing about Visa, guys, is that they do trade in $2.50 increments. So there isn't any single $1 increment strikes, right? So that being said, we might need a little bit of a move down on Visa because the expected move is $254.65. We really only have 2 strikes. We have the 255s, which is technically above the expected move, and we have the 250-250s. So as you can see right here, even the 255s, guys, they don't really provide enough premium. You would at least want to see $1.25, $1.30 on the bid right here for it to make sense. So far, it is not there. So in the event we get a little bit of a dip on the Monday or Tuesday session here, guys, let's say we dip maybe 258, 257, that will probably be freeing up the $255 strike. Now, because Visa is such a solid company, guys, I would not mind writing this one above the expected move ever so slightly, right? So the expected move is 254.65. I wouldn't be opposed to writing the 255s because we are at the lower part of this most desired range, the lowest part that we've been pretty much since last December, right? So I would probably trade the 255s. However, in the event we get a more accentuated sell-off on the Monday or Tuesday session, bringing us down maybe 256, low 256s, maybe even 255s, right? It has happened before, such as many times last week. If that happens, guys, keep an eye on the 250, 250s. So for me, it'll be one of these 2 strikes, 255 and 250, 250s. Even on the 250, 250s, guys, if we come down a little bit right here, right, come down to this location right here, and maybe we can only find $1 on the 250, 250s, which is less than our minimums, I would still probably take this trade just because of how solid of a company it is, right? So I'm willing to forego a little bit of an ROI just because I know in the event, guys, even if we do get assigned, I know we have a very good shot at having a bounce, and Visa is such a quality company, right? So that is why I'm willing to forego a little bit of ROI just because of how consistent and predictable Visa is as a stock. I would not mind being assigned here at all because I do believe once that bounce does happen, we can probably ride it for a lot of profit. So hopefully that makes sense. So the last stock that we have in our list, guys, is going to be Microsoft. Now, before anybody comments about how expensive this one is, trust me, I know. So I'll be giving you guys 2 strategies that we can do on Microsoft. One is going to be straight short puts, but keep in mind to be writing short puts up here, you need to have roughly $40,000 in capital. Not many people do have that, which is why we can choose to do put credit spreads, which really lightens the weight of how much money we need to take this play. That being said, I figured I should present it because Microsoft very rarely makes this list, guys, because of how high of a quality Microsoft is as a company, right? So moving on down, Microsoft is currently approaching our big area of support. This area has been support pretty much all year since the beginning of January, all the way up till now. This box is pretty much 402 down to about 390 on the dot. So that being said, the expected move on Microsoft right now is about 396.20. Now, we are coming into a few things. Daily oversold conditions, usually a very good opportunity to be buying Microsoft at, and as I said, extremely solid prior weekly support. That being said, let's see if we can find any premium below 396.20. So I'll give you guys the opportunity for the straight short puts, and then we're going to look at what we can do in terms of put credit spreads. So Moving on down for Microsoft Corporation, let's have a look. 396.20. We want to be going below that, preferably be 392 or even 390, right? So let's have a look, shall we? So as you can see here, guys, 392 and 390, there is not that much premium. The one that would respect our minimums is 395, providing $2, which is above our 0.5% rule. Now, to get these, we may need to have a little bit of a dip on Microsoft on the Monday or Tuesday session. So in the event we do get a dip on the Monday or Tuesday session, maybe down to 404, 403, 402, something like that, that will probably free up some premium on the 392.5s. So if you're a little bit of an aggressive bull on Microsoft, such as myself, I love this company, I would not mind playing the 395s, but someone who's a bit more conservative, a bit more of a more patient bull, maybe you will want to wait for a little bit of a dip Monday or Tuesday, and then if the dip does happen, you may be greeted with some even better pricing at the 392.50s or the 390 zone. Keep in mind, you would at least want to see about $1.90, $1.95 on these strikes for it to be worth it for you, right? So that's pretty much it if you're willing to play short puts. Now, if you want to do put credit spreads, well, put credit spreads, guys, are also very easy. All it entails pretty much is selling a put at a strike higher and buying a put at one strike lower. So you basically have, let's say we take these, for example, which is going to be the ones that I'd be looking at for put credit spreads for the week. We could do the following, right? We would sell the $375 put and buy the $370 put, both expiring for the Friday session. So the risk is the width of the spreads. The risk is $500. This is an all or nothing trade. A short put is not an all or nothing trade because if you get assigned the stock, you don't really lose anything, right? You just end up with the shares and then you have an unrealized loss. But for put credit spreads, you have to be a bit careful because if the stock ends below the short strike, or rather the long strike of the puts, well, you lose the entire position. You lose $500 for every contract that you choose to write. So we need to be a little bit more careful on these because the risk of loss is real, right? So moving on, in terms of the expected move, right, 396.20. For put credit spreads, guys, we want to be going a bit further down just because that risk of loss is 100%, if in the event it comes below our strikes, right? So we want to be going very conservative on these because we know Microsoft can move. Usually Microsoft moves 3-4% in the week, but let's say similar to last week, if it moves 6-7%, we want to be have a buffer, right? So that's the bar that we want to set. We want to set a buffer of about 6-7% on a stock like Microsoft, okay? So that would be pretty much starting at 380. So what we can possibly do is start by writing the 380 put and buying the 375. That would provide a net credit. Just look at the net credit between these two. If we're collecting $53 and then buying the puts for $41, we collect a $12 spread per contract. Now, $12, right, collected, you might think it's a very small amount, but you have to look at it on ROI basis, right? $12 divided by 500 on a weekly basis is 2.4%. That is a very good weekly ROI, right? Now, I'm not here to say how many contracts you should write. That all depends on you, your comfort level, and the size of your account, right? Usually most people will run between 1 to 3 contracts on any given week, right? So that would be a decent trade. If you want to go a little bit more conservative, you can always try these one right here, 375 versus 370. The spread between the two is about 10 cents, and 10 divided by 500 is about a 2% ROI on a weekly basis, still extremely decent. So that is what I would do for writing put credit spreads on Microsoft over the course of this week as a whole. So hopefully that makes sense here, guys. Now, that's pretty much everything for the top 5 options plays of the week. Hopefully you guys enjoyed those. Those are the more solid plays that are ready right now, right? They're in our area, our desired areas. We just want to go as low as we can go. Now, here's a bunch of bonus plays that are almost ready, guys. They're in the oven, they're baking, but they're not quite there yet. So I keep these on a close watch list for the upcoming week in the event that the opportunity does present itself, right? Always keep some bonus plays on the back burner in case the top 5 doesn't give us entries. So first stock is going to be UPS. UPS, I like this one, but it doesn't have very high volatility. Usually you need to be almost on top of the stock price, right? So UPS 125.82 is the current price right now. If I bring up the options chain, you'll see exactly what I mean, right? When I bring up the UPS, let's pull it up right here. Give me a quick second. You'll notice that because the volatility is so small, it doesn't provide very juicy premiums that far away from the share price, right? So we're at 125 right now. You can see the premium drops off quite quickly, right? Only 0.5% at 123, which is only $2 away, guys. That's not a very wide margin of error on UPS, right? It's only about almost $3 away. That would roughly be only about 2% away. Not that big of a buffer. So this one I leave on the back burner in the event Monday or Tuesday opens up bright red. If I see UPS on a downswing, 2%, 3% on a Monday or Tuesday session, I may be looking to play it in the lower 120s. Why? Because 120 is a huge former support of prior all-time highs. This one was actually resistance for the stock for almost 4 years. So stands to argue it's going to be just as solid of an area of support. And we are almost into it right now, but you need to be very, very greedy with this one, right? Because we know of the timidness in the market right now, right? Very, very volatile market right now. So if I can find this $120, $121 strike, I will be going for those over the course of this week. Now, moving on further, bonus play number 2 is Micron. Now, Micron, very solid company in semiconductors, but it's not one of the industry leaders of the fashion of maybe a company like ASML, TSM, or NVIDIA, or maybe even Broadcom, right? But nonetheless, the company is at a decent valuation right now. I just need to be getting very good pricing for me to be willing to take this trade. So keep in mind the true support area for Micron is in the lower $80 range, starting at about 82 and then diving all the way down to about $69. So we want to be going as close as possible here to that lower end of support. So if I can find some decent premium on a drop on a Monday or Tuesday session, I will probably be looking to play Micron. $82 to $80 is the pricing that I want, right near this previous support zone that starts in that exact range. Now, moving on to bonus play number 3 is Oracle. Oracle as well, right? You can see that all these trades, they're great setups. They're just not quite ready yet. We need a little bit of a dip, right? So Oracle was a decent trade at the midpoint of last week, but now it's come significantly higher, right? 132. The big support zone for Oracle right now is this clear location right here, right? Prior all-time highs. Now we have the breakout, retest formation, possibly for another run. However, if the markets drag Oracle back down here, think maybe 125 all the way down about 120. This zone right here is where I want to be writing puts. Right now, we don't really have much premium. With the stock at 132, there isn't really that much premium at the 125s or lower, guys. That is the area that I want. I'm going to be very greedy with this one. So far, there's only premium right now at 128. 128 is a bit high. I want 125 or better. So that's why I keep this one on the back burner moving forward. Now, moving on, stock number 4 on the bonus plays is going to be Expedia. Expedia largely for the same reasons, right? Huge area of support under us right now. Big resistance for the stock in the past and has been acting as support over the last 2 months. So in the event we get a little bit of a retest here, we had earnings last week, which proved to be very strong for the company. But in the event they give it all back and start retesting this location right here, lower 120s, guys, 122, 120, as close as possible, as deep as possible in this range of support. So this one I keep on the back burner. It is not quite ready. We need some more declines to be able to open up those lower 120 all the way down to roughly 116 strikes, right? So that's a very decent trade, just not ready yet. The other one is going to be Canadian Pacific. And this one is going to be one that I'm eyeing very, very closely this week, guys, because it doesn't offer that many opportunities for entry. Why? Because it's a stock that only has monthly options. Thankfully for us, this Friday is one of those monthly option expiries, but you can see there's only enough premium right here at the 77.50, and CP right now is 77.78. We're literally right on top of that strike price, so not good enough for me. I want the $75 strike. There's just not enough premium at it right now. So what I need to see on CP is a considerable drop on the Monday or Tuesday session, bringing us down maybe 76, maybe even high 75s. Then I will be tempted to do the 75 region. Why? Because it's one of the most solid names in the game. And if I can get some pricing back down here, guys, 75 or lower, I'm willing to get to accumulate some stock back here, because I do think that an all-time high push is probably due for the stock over the next few months. So that one, I really like it a lot. It's just not quite ready just yet. Now, moving on, another trade that is practically ready, but not quite, is Elf Beauty. So Elf Beauty right now sitting at about 160.83. They had a big drop after their earnings. We covered their earnings on the channel. Their earnings were fantastic. It's just the market environment we're in right now. Unless your guidance is extremely bullish, yeah, if you're a consumer discretionary play, you may get hit to the downside. So that's what happened to Elf Beauty. That being said, I love the area that we're coming into here, guys. Extremely solid area for the stock. Previous all-time high resistance, support, and more support. So that being said, we want to be going as deep as possible into this green box. Think the mid 140s, right? 145 down to about 135. As of now, there's not that much premium available down there because it is still a significant ways away, and we don't have that earnings volatility anymore. So take a look right here. As a matter of fact, 145s, they are decent right here at about $1.03. So those could be a decent opportunity, but I want to be going a little bit lower. So in the event we have a little bit of a dip here, Monday, Tuesday earnings downside continuation, bringing us down into the mid 150s. That's where I might be willing to strike. 140 down to 135 is my desired strike range. Okay, so the bottom end of that range, going to be very greedy and very picky with any consumer discretionary stocks, which is why even though we have premium at 145, I want even lower than that, right? I need to get paid really, really well to be taking on this risk. Now, a few other stocks, guys, has to be Google, right? So Google, right now, the expected move for the week is, or rather the area that I'm targeting rather, is down here prior to about Monday's previous lows into a previous area of support. But you can see the true big area is down here around the 152 to around 144 prior all-time highs. That's going to be better support area for the stock. So now we're kind of in the middle of no man's land, which is why we have to be a little bit careful, right? So that being said, if Google drops on the Monday or Tuesday session down here, maybe I'll be able to find some premium 156, 155, 154. That's the pocket that I'm looking at for Google. Right now, though, all the way up here, there's not much premium down here. So we do need a little bit of a dip. So that's why I say it's just not ready yet. Same thing for Amazon, right? Amazon, I really want to be targeting the lows of last Monday's session. Think 156, 155, 153 even, all the way down there. Right now, it's kind of up here in no man's land. So we do need a little bit of a dip on Amazon here to be able to unlock those lower strikes. As of now, it's just not ready, but I will be keeping an eye on it throughout the week. Another stock we're going to be looking at is McDonald's. So McDonald's bouncing beautifully out of the area that I've been trying to play it now. Over the past couple of months. As a matter of fact, when it was down here, we were playing it a lot. And now we have the infamous breakout on the weekly time frame, and maybe in for a little bit of a retest of the 260, 257 area. So as you can see, the trade is just not ready yet. It's still a bit too high. McDonald's is not known for its volatility, so we really need the stock to come down into this area to provide us better premium. As of now, there is no premium available at 260 or 257.5, but I'll keep this one on the watch list over the course of the next 2 weeks to see if it eventually frees up. Another one is ON Semiconductor. ON Semiconductor had very, very good earnings just a few short weeks ago, and unfortunately with the market volatility has given it all back. We've been playing this one a ton over the course of this year, guys, in the mid $60 range, and happy to say we are pretty much back there again. So this one I keep on the back burner if ever we get a heck of a drop on Monday or Tuesday down to maybe the 70, 69, 68. I'll be looking to pick these bottoms, guys. $65, $64 as low as I can get while still getting 0.5%. That's another semiconductor idea. And a cheap one that I have for you guys, right? For people who are running small accounts is Robinhood. So Robinhood had very, very good earnings last week, but as you can see, size of the drop is very, very, very harsh, right? So now if in the event we're looking for a retest and then maybe set up the daily uptrend, this is what I'm looking for, guys. The setup for a higher low. If ever Robinhood drops right here, so maybe lower 17s into the $16 range, probably we can find some premium $15 and below in the support range. But as you can see, we're considerably above the support range right now. So not much premium in the 15s. We need to be getting a little bit of a dip to open this trade up. So as I said, it's not quite ready yet. This green box, guys, is the biggest area of support in recent memory for Robinhood. Resistance here for the stock, resistance, resistance, resistance. And now you can see we blasted up, almost used it as support before moving higher. That's why I really like this location, guys, right? $15.70 down to about $13. We want to get as low as possible, guys. So think $15, $14 to be writing those options. That's pretty much everything I had for you guys in terms of the top 5 options plays and a ton of bonus plays. Hopefully you guys enjoyed that. If you did, consider dropping a like on the video. Would appreciate it for the growth of the channel. Also, if you're new here, consider subscribing. I'd love to see you back. We do these every single Sunday, and we do the daily market recaps Monday to Friday after the close. So hopefully see you back in one of those videos. And then lastly, guys, if you have any questions at all on the strategy, stock selection, the covered call portion of the video, anything you want, guys, leave it down below in the comments, and I'll be more than happy to help you out. Usually answer you within the first 24 hours. So take care, guys. Happy trading this week. Be very, very careful and be very, very selective with your strikes. Be patient. Do not chase the market because you guys know we have a lot of volatility right now and the overall sentiment is relatively negative and the markets are in daily downtrends as well. So keep that in mind. Be very selective and greedy with your strike prices. Do not chase. So take care. Love you guys. See you in tomorrow's video after the close. Peace.